Hey, thanks. I'm assuming everybody can hear me. We've decided to turn our webcams on for this event. You can either stare at them or not, minimize them or keep them up. It's up to you. But we're going to get going on something here that we're really excited about. And just to let you know, this really kind of came from concept to a product that we're going to show here in a matter of just a few weeks. And it was pretty much an all hands on deck because we all realize the value of what we're going to show you here on the heels of the Anchored VWAP book, VWAP. I don't want to upset Brian. VWAP. I'm going to have to really start changing the way I say that. It's a great book. If you don't have it, we've got links. I assume a lot of you people probably have read it. So what we're going to do is we're going to talk about with Brian some of the concepts of the book, and we're going to take it to the next level beyond that. So before we get to that, just a reminder, this is a webinar. There's three personalities up here, and we're all individuals. We're not financial advisors. So we're going to give some opinions, and we'll look at some stocks, but they should not be construed as financial advice. These are just our opinions. If you need financial advice, you got to go seek out the brokers that want to take you to lunch. So as mentioned, if you're not familiar, the Maximizing Trading Gains with Anchored VWAP was a long book. Brian spent a lot of time writing it, and he got it across the finish line just about a month ago. And it's been a lot of talk. I know it's way up high. It might even still be #1 on the Amazon trading charts. We'll let us know that. But oops, the book is there. You're going to want to get a copy of it because what we're going to show you today and what Brian's going to talk about will make a lot more sense if you have a good foundation. I've known Brian personally for 14 years, so when we showed him what we're going to show you after he speaks, it's pretty much a no-brainer to really understand that this is the next logical leap from taking a concept of Anchored VWAP, and moving it into a real-time practical usage. So don't want to spend too much time on teasing, but we do have a new partnership. So if you're just tuning in, you're going to want to stick around and hear what we have to offer after Brian kind of sets the stage for the basics of his Anchored VWAP research and the great book he's put together. So I'm just going to park it on that screen right there. You've got a look at my desktop, PSLV, but I'm going to change presenters. We're going to go ahead and bring in Brian, and he's going to talk about some really key concepts of his new famous book. And thank you very much for Brian for joining us.
Okay, well, thank you as well. And yeah, I'm really happy to be here. I've been, like Steve said, we've been friends for 14 years, and Michael for probably 6 or 7, I think, Michael, somewhere in
Yep.
there. So, and the whole Trade Ideas team, a bunch of great people. So I'm happy to finally be working with them in a way that's, great for both of us and to really share something valuable here. So if you're familiar with my work on Alpha Trends, I'm at Twitter, my handle is Alpha Trends. That's the best way to kind of see what I'm doing if you're not a subscriber to Alpha Trends. So today what we're going to talk about is some strategies for using the Anchored VWAP, and that's what the book was really written for. It was really written, there's 3 parts to the book, and it did get as high as number 266 overall on Amazon, which I was pretty proud of because there's 33 million titles on Amazon, which is just insane to think about. Right now there's 96 rankings, 93 of them are 5-star, and everyone that I've spoken to has told me that it makes a lot of sense, and I'd like you to find that out for yourself as well. It's available on Amazon. Ebook is on Barnes & Noble, it's on Apple, and it's on Google Play as well. So today, my assumption is that you're going to have a little bit of understanding about what the anchored volume weighted average price is. To me, it's the most objective way to 100% be sure who is in control of the market from any given point. That's what the anchored VWAP does. The traditional VWAP is for one day, and maybe use that in your day trades and that sort of thing. And you can even get more advanced with anchoring intraday off of your 1-minute chart if that's your time frame. But for any time frame, the anchor allows us to set the place where we want to measure who has control from. And in the book, I went through, of course, all the history and how it came about, how institutions use it, so you can understand the logic of how institutional programs are built. In fact, Ken Griffin, if you remember GameStop testimonial a couple years ago, he said, everyone knows that Citadel is the largest market making firm there is. And they said that 90+% of all of their orders are done via algorithmic trading, and the majority of those have a VWAP component to them. Which the guy, you got to listen to him. He made $4.1 billion himself personally last year, and if he tells you this is how they're executing orders, you better pay attention. So what it allows us to do is really objectively measure who has control, whether they're in balance and just kind of neither has control. Supply is greater than demand, or demand is greater than supply, because that's at the end of the day what moves stock prices. It's not the motivator for why people buy and sell, but it's again, only price pays, as I often say. So what we're going to talk about is just some simple things that were straight out of the book. Number one, I think the most important thing you can do to understand the Anchored VWAP is use them as support and resistance tools. So there's a whole chapter about that, and you can see that we've just got a couple of examples here. Just like traditional support, the more times it's tested, the more likely it is to fail. And that's simply saying that the supply is overwhelming demand, and then the sellers take control. So and this is straight out of the book, a chart from the book, they often show us hidden levels of support and resistance. The basic way we want to look at it, if the stock is below a declining volume weighted average price, well, from the start of that measurement, the sellers are in control, 100%. It's undeniable. You cannot argue it. If you do, you're arguing facts, and these are just like the laws of science. They are real. If we start to see oscillation back and forth above and below, well, it tells us there's a little bit of indecision. In the VWAP, you're going to say, well, it doesn't really help me because this market's sideways. And that's the beauty of it right there, too. It tells you the market is sideways. So wait for a clear signal for it to get back above, make a higher high above that volume weighted average price, because that tells us the buyers are in control. When it's below a declining volume weighted average price, you'll often see that it acts as resistance, as pointed out numerous times on this chart. So this is 1 month, and it's a 65-minute time frame. And again, sideways periods, you're going to look at it and say, well, there's no value here. And finding no value is often what the value is, because it tells you just move on, forget about that one. So when we have a support and resistance come together, that's what I like to call the pinch. So what I'm basically doing here is giving you a very brief overview of 3 different uses of the Anchored VWAP. And then I'm going to tell you, I'm going to turn it over to Michael, and he's going to show you how to do that with the assistance of a computer, because as we know, no man will beat a computer, and no computer will beat a man, but a man with a computer will beat a computer. I think that's the quote, right, Steve?
Something
Anyway,
like that.
so what an Anchored VWAP pinch is we have a dominant trend, the longer term trend. So it allows us to basically see 2 different trends at the same time. The longer term trend here is clearly higher. That's that green supported anchored volume weighted average price. As the stock corrects, when do we add this red Anchored VWAP? Well, we add it generally over here, once it's begin to pull away from there. And we say, is that going to be an important level? And as it pinches between there and it's not extended, well, we want to buy as it comes out of that compression of range. The thing is, we don't want to buy it while it's in the range. Again, another example right out of the book that, something I've wanted to make clearer in this book is that nothing works all the time in the market. That we might be expecting, hey, the primary trend is higher here, look at this beautiful pinch, and guess what? Sometimes they fail and they break down. So we don't want to buy, when the stock is doing nothing. We want to wait for price confirmation. So while it's in a pinch, we want to anticipate the price movement. As it breaks out, and if it's not extended, we participate. If it fails, no problem. We avoid a big miss. And that's, the way a technical analysis book ought to be written, is show me some examples of, where it didn't work and how do you handle that? And that's what stop losses are for. So here's one, again, with that orange is a 5-day moving average. And as it breaks beyond that VWAP pinch, you can see how this Anchored VWAP off the peak was resistance. Well, that roll of resistance flipped to support on the test, and it was up and away. And once it starts moving, you raise your stop underneath these successive higher lows. That's the way I like to manage risk. Is I'm a trend trader, so I base it on the definition of trend. Once it starts moving away from these little consolidation zones, I put my stop under the most recent relevant high or low, or in this case of a short, above the most recent relevant low or high. So again, more examples out of the book just to kind of make sure you grab a copy. It's on Amazon, it's on Kindle. It's not on Kindle, actually, it might be coming there, we'll see. Anyways, the other example that Michael's going to talk about is IPOs. To me, that's one of the most pure ways that we can look at a stock. As W.D. Gant said, if you have a 0 point, you can measure anything. And with a IPO, we have the exact measure point. So here's a stock, again, out of the book, chart 11.4, and there's 145 of these color charts in the book. It just adds structure. If you look at the chart on the left, that's just, with nothing in there. You certainly can't put a 50-day moving average on it 5 days into trading. You could put a 50-period moving average, but I guarantee it won't show you as much value as the anchored volume weighted average price from the beginning. It tells you who's in control. Well, after a little bit of a battleground, the sellers took control. 2 days later, the buyers took control. And these numbers are where I've explained in the text of the book, exactly laying out exactly what action should be taken at each of these points. Here's another one, showing the IPO from day one on a 10-minute time frame. 3 days into it, you can see on the second day, it gapped lower and opened right at that volume weighted average price. Day 3, right at that anchored VWAP from the IPO. Buyers were there waiting to get more of this stock. And in both cases, those bounces resulted in tremendous trades. On the same time, here's a longer term with 96 months, and you can see how it initially had been finding buyers. We had that little indecisive period where it crossed above and below, and then the sellers took control, and that's where at 11 it was clear to short this stock. So that's the way we want to look at the anchored VWAP, is that it allows us to add structure and logic to the market where none exist otherwise. It's not based on random, 10 days, 20 days, 21 exponential, just things that people have decided upon. It's actual measurement of supply and demand. This is Google when they first came public. And this was, back in, 1991, I think, or 96 maybe, 98, somewhere in there. Either way, it doesn't matter. The point is, I remember when Google came out, they did this Dutch auction and everyone hated it, and it held above the anchored VWAP for the first 4 or 5 weeks. Sellers took control, but at 0.3 it crossed back above it, and this was right here. And look at how long that anchored VWAP from the IPO, back here almost a year later, it bounced almost precisely from there. So we want to identify them as levels of interest, where what my personal way to do it is to watch it as it hits that level and wait for it to bounce, then buy it and set my stop underneath that 0.4. So I've set out different ways that you can personally use it, depending on the way you want to look at it. Here's another one. This is Alibaba when they first came public. So this is just a quick look at the table of contents. You can see how it's laid out. It all builds upon each other. I will say that if you're newer to trading, or newer to the anchored VWAP or the style that I teach all the time, start out with the appendix, because in the appendix you've got the 4 stages, multiple time frames, and sources for the VWAP and that sort of thing. But I wanted to keep this brief here. We're 15 minutes in. I wanted to to let you know that once you get this information and you're comfortable with it, there's the natural question is, well, how do I implement this myself? Well, I have alphatrends.net, where I provide daily videos that are instructional, and they have trade ideas saying, here's why we're looking at buying this stock, here's where the stop will go, and that sort of thing. A lot of people, or some people, don't want to do that. They want to be independent and find the ideas themselves, and I applaud you for that. And this is what I'm really excited to turn over to Michael now to introduce to you, how in trade ideas right now, these 3 strategies have been built in so that you can find them, the computer can find them for you. They're pre-built and you can find them. So I'm going to turn it over to Michael. And Michael, you'll do a much better job than I, so I'm not even going to try to begin to explain the logic coding that went into this, but it's all based on the learnings that are in that book. And this is an opportunity for you guys to really, put this to work for yourselves. So take it away, Michael.
Yeah, and thank you for that, Brian. That was fantastic. This is something that we're really proud of, that we're really pumped to do in conjunction with Brian. Just a little bit of history, being on with Steve and Brian. I remember I actually told this story a couple of years ago when I was first invited to talk to Trade Ideas, probably 2015. The beard was much shorter and way less gray. And I used to trade, when I learned to trade, I would trade at the prop firm. And prop firm, you're trading other people's money, so you have a maximum daily loss. And when that loss hits, you get a big clock on your screen. You got 30 seconds to get out of positions, and you can't trade anymore that day. And I used to watch Today Trader videos from Steve and then Alpha Trend videos from Brian, because I couldn't go home because I felt like I was defeated. But if I stayed the entire day and just learned from others the whole time, so it's really cool to have. And this was 2006 to 2008, so a long time ago, that I've been following these guys, and it's really cool to be here and be building this kind of stuff going on with it. And both of them will tell you I'm a bit of a skeptic and a cynical guy. So even though I was following Brian for a long time, and maybe I'd throw an Anchored VWAP on my chart here or there and play with it. We've had the ability to draw these tools for a long time on our charts. I was never really fully sold until I read the book and I started building these scans and started playing with a lot of this stuff myself. So this is super exciting because it takes what I found is a lot of the tedium out of doing this, where you don't have to load up a chart, and you don't have to have the skill of Brian, where he can probably tell you where the VWAP's going to line up sometimes just by eye. But you can find all of these for you. So what we're offering is a product that I am being told by my dev team right now there's so much interest in, the website's battling to stay alive, but a addition to Trade Ideas as it is. So if you are currently a Trade Ideas subscriber, or if you're not, if you pick up a copy of Trade Ideas, there is going to be an add-on, an addition, the Alpha Trends Anchored VWAP add-on, where you are going to get not only the scans that exist now, but any scans that I'm going to work with Brian, and we are going to build into the future, different time frames, different setups. I've got some really cool stuff I want to talk with Brian about off air that I think may be cool additions to things that we can do. And that's all going to be built in, and that's an additional product that I'm sure the link is being shared in the chat below. And if not, we'll get to that at the end of the webinar. First, I want to show you essentially what will be part of it. So let me load up this. So when you get to Trade Ideas for the first time, you have access to all of the things that Trade Ideas is already very good at. Finding your gappers, finding your volume movers, figuring out what's going on that day. But we have added on the channel bar an additional channel in which you're going to have access to all of these scans pre-built for you and ready to go. So that's the first benefit, is that the setups that you saw Brian talk about right off the bat with the the pullback to the Anchored VWAP from IPO, and my personal favorite, the Anchored VWAP pinch, they are already built in, so you don't have to go in and try to figure out how to build these things yourself and tweak time frames and tweak all of these custom things. But at the same time, we have built into the system the ability for them to be drawn for you, and then that drawing to adapt based off of what scan that you're clicking on. So this is the layout as you guys are going to get it, where you have multiple time frames. That's another book that I should grab behind me that I always have back there, which is technical analysis using multiple time frames. So we got a 15-minute chart, a daily chart, a weekly chart. These can be moved, different indicators can be added and removed. If you're a moving average guy, you can change colors, all of the standard stuff. You get access to our single stock window, which you can kind of customize this with whatever fundamental or technical data point you want. Things like short float, I always leave up there. I want to know how heavily shorted is it? Is that growing? When are earnings coming out? Things like this as a technician. But if you're a fundamental guy, we have earnings growth and EPS and price earnings ratio and stuff that I know makes me, Steve and Brian, kind of gloss over, but some people love the look of that. And then access to our price alerts. So if you like a stock, you can see I have a price alert here for ON set up just right at these highs. You can just click on the chart and then it will alert you when that's happening. And then access to all of the IPO anchored VWAP scans. But I built my own layout, which is something you'll be able to do as well, just to really focus and narrow it in. And I'm just going to go through some of the symbols, some of the scans, and kind of show you especially the auto drawing feature, which I absolutely love, which makes things, super easy. So I've got some notes while I keep looking down here. For the IPOs, there were some that look interesting. So this BHVN, you can see the second I click on that on the chart, it draws this anchored VWAP for me. So I don't need to go on the screen and try to figure out where it's going and where it's coming from and all of that. It instantly knows that because it came from this scan, it is to anchor the VWAP to the IPO price, which is right here, and then draw that out for me. And these scans are updating every minute or so, and they're looking for stocks in this particular one that are near that anchored VWAP from
Michael,
IPO. So yep.
I hate to throw you off, but I had to, you just said the magic word. These are updating every minute.
Yeah.
What Trade Ideas is a scanner. Please don't confuse a scanner with a screener. A scanner is something that's monitoring everything in real time, like a police scanner. Something comes through, we catch it. A screener is something more like FinViz. You check the boxes, you hit the input, you get the output, and it's static. Totally different. So going forward, screener versus scanner, Trade Ideas is a live scanner, updating all the time.
Yeah, and that's the beauty of it, right? So as we get shorter and shorter in time frame and we have all these different time frames, if you're more of an intraday person, you can see these things kind of come and go all day long and they'll just be updated. There's no extra data fees or anything like that. It's all piped in for you. So and again, the speed of it, right? Because as active traders, yes, it's nice to have an entirely laid out plan in advance and know exactly what I'm going to trade, when I'm going to trade it. But sometimes you're just in the middle of the day and you're clicking through some charts and maybe an opportunity just pops up that you would have missed if you didn't get that information right then and there. And just a props to the dev team for a second, the amount of data that this is computing every minute is absolutely extraordinary. Like, this is something that only we could do this frequently on this many symbols, on this many scans, because as Brian was talking about, it's not just as simple as like a moving average, right? A 20-day moving average that just takes the last 20 closes and divides them by 20. It's looking at price and volume together. So it's constantly all the time adding in the new volume as things happen, crunching in this new data. So tons and tons of data is coming in. And, we were talking about in the green room where we were chatting, we were talking about gold before. So here's another one, IAUX, a nice little cheapy gold play that this one would be on here the next couple of days. But if this moves too far from the anchored VWAP from IPO, just as we can add things on, we can just take them off just as easily. And again, we are not differentiating on things like market cap. So I don't know what this OABI is. It looks like it's some sort of biotech. It's, again, a fairly new company. But again, you can see it, like Brian was talking about, in real time. It found support at the anchored VWAP just a few days after it IPO'd. And then it came all the way back here. Where did it IPO? November. Came all the way back here 4 or 5 months later, found support right there and is starting to bounce off it. So again, the beauty of just being able to click through these. And then if I switch and I go to this scan, which is finding the largest gap that's happened recently and draws the anchored VWAP from there. So KB Homes is a great example where we gapped up 4 or 5 days ago, and it's pulling back, and so far it's finding support at that anchored VWAP price. And you see how I didn't have to do anything. I didn't have to go in and open up the scan and then click on the chart and try to figure out, okay, here's the gap and I can draw the VWAP. You can do all that yourself if you want to just add, different VWAPs to it. If I anchor one to this high to see how that's going to react, we can do all that. But the beauty of is now I can get through so many charts so much quicker because I'm not sitting there and doing that all the time myself. I mentioned my personal favorite, which is the Anchored VWAP pinch, because I'm a trend trader. I like to trade things like bull flags, and for me, the Anchored VWAP pinch is kind of the next generation of the bull flag. Whereas a bull flag, we've all heard about it. Stock goes up, it bases sideways for a while, you take it on a breakout to new highs, something like this IoT. But what I really liked about the book that that Brian talked about is how the Anchored VWAP, when used in this way with Anchored VWAP pinches, get you in much earlier. So this is actually a trade I took some of this today because it gapped above the Anchored VWAP and it started to push through. You know, if this thing gets back to highs where other people are just going to see it on the radar and start buying it, then I'm probably already going to be selling a piece, right? And taking a little bit off the table. If it breaks through highs, great, but they are going to be my exit liquidity if things hopefully continue to go. And again, you notice I didn't draw any of these. They just pop up on the chart, they draw in for you, and it drew in two, both the lower AVWAP and the upper AVWAP, because it knew I did it from this scan as opposed to the other ones that I showed from the other scan where it just drew the one. So as I click through a lot of these, like RNA actually looks like it could be breaking down for you guys that like shorts. This is, you know, kind of the reverse of what Brian showed for the long setup. Now we've also included a couple columns in here, and I've color coded them to quickly see. So we have position in year range, 6-month range, and 20-day range. So you can very easily say, okay, well, the reason I clicked on IoT is because all of those are green. So I know that this is in the high end of its year range, it's in the high end of its 6-month range, and the high end of its 20-day range. So I know that this is a pretty strong stock, where when I clicked on mRNA, you can see all of these are red. So I know it's in the low end of its year range and 6-month range and 20-day range. So by eye, I can quickly go through and say, oh, you know, let's do, what else looks good in green here? I had these noted. CLTL right here. So this one is in the low end of its most recent range, but if you go out further, you can see it's moved up a little bit off its lows. So this one might be one to look at if it can reclaim this Anchored VWAP, simply because, you know, it closed the gap, it pulled off a bit, and we can go from there. But I don't need to go through these, all of them. If I'm just looking for stuff that's extremely strong, I can click through and I can find out where it is in the range there. I'll go through just one more example here. Bring that back up. Right there. Did IPOs, I did big gaps. Let's actually go for the longer term traders. And this is actually one that I'm really liking, where it's the Anchored VWAP, but it zooms out on a weekly chart. So TME was one that I was watching here, where again, it just draws all of this in for me on the weekly chart because it knows that the scan is looking at the weekly chart. And you can see this Anchored VWAP from the lows, it's acting as support right here, just as Brian was saying in his book. And then we've got this Anchored VWAP from the top that it was acting as resistance for. And if we can close over this week, that can be my symbol. And that's one of the reasons why I wanted to talk about the different time frames, is because we're going to go out far in time. I'm thinking monthly and longer term, and then we're going to go in closer in time to 15-minute charts and even shorter, and just try to get that entire gambit. So whether you're a day trader or, you know, more like me, Brian, and Steve here, where you're in that swing time frame, or you're even kind of a long-term investor, you'll be able to find these Anchored VWAP points, you know, these pullbacks. BJ, again, for another example, on the daily chart, pulling back right into its Anchored VWAP right here. So again, this is a lot, and it's a lot of computer power. It took a lot of kind of imagination and work to build, but this is only the start. So that's the last thing I wanted to stress, is that everything that you've seen here tonight is part of it, but it won't be the end of it. As we go on, we're going to continue to build scans. I know Brian's a big fan of the 5-day moving average, so maybe we combine some Anchored VWAP stuff with some 5-day moving average stuff and put all that into the product. And, you know, I'm just super, super excited for the coordination that we're doing with this, that we're going to be able to build so much more that I think is going to be super cool. And to be honest, I'm just glad that this is public now, because I do a lot of webinars and stuff, and I do a lot of scanning on Twitter and sharing charts. And I was actually having to hide this behind like a face camera or something, because I have found that this is something that I've been using way more in my trading than I thought I would. I initially just built it because, Brian and Trade Ideas, we have this great relationship. But again, I'm using it myself, and it's to the point where I could see myself only trading a VWAP pinches from this and probably doing fine.
Great, good stuff. I'm trying to like kind of compile some of the questions. It seems like most of the questions are curious about the smaller time frames. Those are coming, right, guys? The smaller time
Yep.
frames. Okay.
Yeah, very soon.
Yeah. The other one asked about, is there a delay, or is there a limit as to how far you draw back on the pinches? I mean, they can be 2 weeks, they can be 2 months, right? There's really no limit. This is just a direct question.
Well, yes. So if we look at TME on the weekly chart, the first anchored VWAP comes from this low in October, right? So we're talking 5-6 months that this thing has been valid for on the weekly chart. And it's one of those things, like, I'm really glad that you explained why in the book, Brian, because I was just watching for the longest time, and you would do some kind of joke tweets. Oh, it was probably a coincidence that it bounced here, and then you'd show the AVWAP. But it's just uncanny the amount of times, like, again, this on a weekly chart, it came right down. It just penetrated the AVWAP ever so slightly and then bounced off. And it looks like that's going to be the springboard to shoot this Tencent music even higher. And it's like, if you look on the chart, there's really no other, there's no kind of major support resistance point. There's just nothing. So if you didn't have this, you'd have no idea why someone came big and started to buy right when it hit that level.
Yeah, so there's no right answer to that question as to how far back you draw the anchored lines for a pinch. It's just, it is what it is. You go to the nearest low and the nearest high, and it just depends on what it is. The reason I like this so much is because, my 2 cents on all this is, we're trading human emotions, we're trading collective behavior, and these charts are the footprints in the sand. And when you can take an event like a gap or an IPO or an earnings gap, and anchor that moment in time, you've basically trapped the emotions of a big group of people, and you can start to gauge those emotions and how they're feeling. We all know what it feels like when you're no longer on the good side of a trade, you're on the bad side, and your emotions change, and that starts to snowball. So it really is a self-fulfilling prophecy, the way these anchored VWAPs play off of the human emotion in a complete crowdsourced type of way. That's the way I see it.
Yeah, I call it the ultimate sentiment indicator, because
Yeah.
it's not just opinions and, just the bullshit that people talk about, but it shows exactly, precisely what people are doing with their money from a certain time, from the beginning of the year, from an earnings report, from an IPO. And, as Michael mentioned, some of those things are coming as well. So where you can go with this is just crazy. And the fractal nature of technical analysis is that you can use it on a 1-minute chart just the same as you can use it on a weekly chart, meaning candles constructive weekly chart data or 1-minute data. It's all the same type of analysis. It comes down to where do you fit in? And people have asked me, will this stop losing its efficacy when more people start, using it? And my answer is no, I don't think it will, because people will use it for different time frames. Some people will look at it, a large value fund will look at a stock and say, I want to buy FSLY while it's below that VWAP, because it means I'm paying less than the average over the last year and I'm getting a deal. So it means different things to different people. The majority of the people here, I believe, are most likely trend traders, or even if you're trading reversal off of a VWAP, your time frame is going to be much different. And a lot of people are just going to end up screwing up the implementation of the trade around it, because I screw up trades. I look at it and I say, hey, I should be doing this here, and I somehow do something different. And it's just human nature. And the more experience you get, the less often you succumb to those emotional, FOMO and start experiencing JOMO.
Well,
Enjoy this.
just like every time you see me look down, I've got like my iPad here for writing. And you mentioned Anchored VWAP, and I immediately went, or year to date Anchored VWAP, and I went to write it down. And that's how quickly I see this product developing. Again, you already get a whole bunch and lots of scans. And I think if you were to look combined and you were to go through all of the symbols that are in there right now, you're looking at about 250 to 300 charts a night of things that have either pulled back to Anchored VWAP, or they have an Anchored VWAP pinch, or the IPO. But the year-to-date Anchored VWAP is something that will be added next week. So it's just, as things go, and as me and Brian talk, or as we get ideas from somewhere else, Brian's just going to send me an email and say, hey, Mike, can you do this? And if the answer is yes, you'll see it days after in the system. So, and the beauty of all of this is we're trying to keep it as hands-off to clients as possible, right? You know, as Brian was mentioned, you read the book and you go, okay, all of this is good, but then now what do I do? Like, how do I find the things that are doing these setups? And again, the plan is we're just going to keep building them out as things go. And eventually, I think there's going to be way too many symbols for anyone to actually look at. And what you're gonna have to do is just pick a time frame, because you know, it's to the point now where on the weekly one that I'm looking at right here, there's 50 different symbols to look at that are doing this weekly Anchored VWAP pinch. So you can definitely, we're gonna find a lot, and we're gonna keep kind of expanding as thing goes. And again, I'm getting super pumped. So.
Yeah, a lot of people are asking about, you know, the link to subscribe has been dropped into the chat window. There's not going to be a free month. We don't do that, but we will have a promo code. So there's an Alpha Trends promo code in there to try for 20% off. A couple of questions, again, I'm going to compress here. People are asking about, well, how do I trade these? Well, my first answer, I know Brian's going to like this answer, is buy the book, and he'll tell you how you trade the setups. But just to entertain this question, can you or Michael bring up an AVWAP pinch and maybe talk about how you might play an AVWAP pinch, what you're looking for, when the entry would be, or something along those lines?
I mean,
Sure.
I could tell you one to pull up that it will probably draw them in on. You could do NEWR maybe, or actually MAXN. Do MAXN, that's a good one. That one just kind of came out of its pinch yesterday and is hopefully going to follow through. Go on a daily time frame there, Michael.
And I
And
just want to show that we can
This is the
pop
this
those
is the
in.
workaround. Yeah, when you don't have automatic lines being drawn, this is what you have to do.
Well, and this is the amount of time that's being
Saved.
every time you just click on a symbol, right? Is I don't have to go through and, you know, draw all these in. It's just kind of done for you.
so I was looking at actually, and I probably should have told you this, the year-to-date anchored volume weighted average price, and the one just off of that recent gap, which is the earnings report. So what we had here was, you know, the stock had pulled back just to that anchored VWAP from the beginning of the year. And I don't personally like to buy the touch of the VWAP. And in fact, there's a chapter in there that is basically buy the touch or wait for confirmation after. I look at the volume weighted average price anchored from a key point and say, that's a level of interest. Now what I need to do is look at a shorter term time frame to say, do I in fact want to buy here? Is there evidence that the buyers are coming into this area? I would never buy a stock because it's on its 50-day moving average. I would never buy a stock just because it's hit a 61.8% retracement. I need to see on a shorter term time frame that there's evidence. So that tells me start looking closely here. And then if we anchor one to the earnings report, which is that gap up about 2.5 weeks ago, you know, the stock underwent some profit taking and it's just broken out beyond that. So it tells me from that event where there was a large shift in the supply and demand in the market that the buyers are now back in control. We know this with 100% fact because the average price paid is $24.60, and here we are at $25.71 per share. So that's the way that I would, you know, look at those. NEWR, maybe that one will pull up, or DKNG. Those are a couple that are, you know, kind of pinching right now. It's just amazing if you really study this, how often you'll find pretty close to the exact turning point in stocks.
Well, how about you judge my trade and let's see if I did it correctly. So, um, IoT, I
Yeah,
found this
that's a
from the
perfect one.
scan, yeah, yesterday. And, just people ask me about how you buy them. Again, I want to, you get all of Trade Ideas and then you get this add-on. So one of the things that we do at Trade Ideas is you have simulated trading, and you can push trading to Interactive Brokers, E-Trade, and very soon Alpaca. So how I actually bought this is a simulated account, but I linked to Interactive Brokers, is I basically just went in, I can click on the chart and just say, okay, if it gets there, buy me some. And then it automatically puts out a stop loss below. So the actual mechanics of trading these and setting these up the night before, you can do all with Trade Ideas. So now we've got it so that you're going to click through the symbols. It's going to tell you which ones are doing this pinch setup, right? This CTLT. If I like to look at this and I wanted to trade it as it broke out of this upper VWAP, I know Brian very much fine tunes his entries much further, but I can just click and I can click buy, and you see that just put out these orders for me. And if I'm someone who now needs to go to work or focus on something else or want to look somewhere else, I can now send this through. And then say I'm in this webinar and I'm interested in this and it sounds interesting and I just read the book, but I don't feel ready to trade with real money. Again, we have a simulator built in. So you can take this product and you can, and as I'm sure Brian and Steve will agree, please, if you're a new trader or you're just getting started, or even if you're new to this strategy, you can just paper trade it for a couple weeks or a couple months until you get comfortable. Because then if you do something really wrong, it's not real money, it's fake money. And then once you kind of get your sea legs going and you understand which of these pinches work for you, or if you like the pullback or the year to date or the IPO or whatever it is, then you can you take it and you link it to your brokerage account, and then you're just continuing on with the same UI, the same setups, and you can trade with your own account. So that's the actual mechanics of how you could just simply put these in and just right, the broker will take care of the orders from there. And as someone who does very well with the planning of trading but doesn't do so well with the actual execution and emotional control and stuff, I love that I can just scan the night before, set up all my orders, walk away, right, reevaluate tomorrow, and repeat. Mute Steve.
Thank you, Mike. How about taking
No problem.
profits, Brian? The question on when do you want to start taking profits when it's really going in your favor? Do you have a standard deviation? What do you use to decide I'm going to take some off here? I know you like to leg out.
Yeah, so for me personally, I will use on the very first day of a trade, in this market condition, especially where things aren't following through as well. So it changes with market conditions, but I generally want to take a first third off if it hits daily R2, and that's just the pivot levels. That to me is not so I can make a lot of money, but to reduce my overall risk. I like to get into the trade aggressively. And then let's say we buy this CTLT as it gets above that little high. Well, what I would then do is I would look to that place where most people are going to call it a breakout from that March high. When it gets to that March high, I'm going to sell another third right there, because now I've seen this stock rally, 5-6% in maybe a couple days, and you're going to get the emotional crowd who is going to chase the breakout, because you hear a lot of people are reading books from 20-30 years ago about how to trade breakouts. Well, guess what? That's no longer the way it works. You have to be ahead of the breakout crowd, and in fact often sell to them. That's why so many breakouts often fail. So I want to sell some into that breakout, generally speaking, and then on my final third, I simply use the definition of trend, and that is, of course, higher highs and higher lows. So if I enter on a 10 or 15-minute time frame, so meaning 10-minute candles, 15-minute candles, I'll then raise my stop up under the successive higher lows. I'm not using standard deviation bands. I'm not using, Fibonacci price targets. I don't do price targets. To me, I think, it's reasonable to say I want to take some off at a certain level and then let the market decide for me. If I'm truly a trend trader, I want to hold that stock until the definition of trend is broken. So, and I must have written this 20 times in the book, which is on a long trade, I want to set my stop, raise them up under the successive higher highs and higher under the higher lows. So I call it the most recent and relevant higher low for the time frame I'm engaged. For a short sale, I want to lower it down just above the most recent and relevant lower high for the time frame I'm involved.
Is there
Well,
ever a
and
period? Go ahead, Michael.
yeah, sorry. But I just wanted to show, as Brian mentioned, right, he likes multiple time frames. Again, the first book, technical analysis using multiple time frames. So one thing that we made sure of is that, so I brought up mRNA, right? And, say we're trading this pinch and we want to short this on a breakdown, and Brian mentioned going into a shorter term time frame. If you do that with the charts, the anchored VWAP still draws, right? So
Yeah.
you can zoom in and you can say, okay, well, where is this exactly? It's like 146 right now. So you can plan your trade on the broader time frame, and then you can zoom in and you can say, yeah, now I need to see how price reacts here. And if it can break through and hold below or base below this anchored VWAP. So yeah, you can switch through time frames and just make sure that you're always looking at that anchored VWAP. Because yeah, if you really want to fine tune your entries, then yeah, that makes perfect sense. You start wide and you use that to develop your setup, and then you zoom in, and that's where you decide to pull the trigger one way or
Is
the
there
other.
any relevance to the pinch between the two lines? A wide pinch versus a
Absolutely,
tight
yes.
pinch? Okay,
In
good
fact,
question.
that's, I see people who are trying to implement this, and I love it. People point out different pinches to me on Twitter and that sort of thing. And one mistake I see a lot of people doing is pointing out, a stock that maybe, let's say it ran from 25 to 35, pulled back to, let's say, I'm sorry, I'm not making myself clear there, so let me start over. So the point is, if it's a real wide pinch, what happens is to travel from the bottom of the range to the top of the range, it might take a 10% move already. And I don't want to buy a breakout of that pinch at that point because it's already extended. Instead, I'd like to see a really tight compression of energy so that maybe it comes together where at the start it was 10%, then it narrows down to 2-3% in there, the difference between the two anchored VWAPs, and then to buy above the higher one and set my stop under the most recent relevant higher low. Those ones tend to have the best probabilities of success, and you have the ability to have a tighter stop, so you can theoretically trade more share size with the same amount of risk as if you traded that other one with a larger, wider pinch.
All right, one
So,
last. Go ahead, Michael.
well, just first, just because this was really cool. So again, I've been taking notes with my iPad the whole time. So now I've got an idea for another scan already that I'm going to build next week. And what I will do is I will sort by the
Yeah.
tightness of this pinch, right? And again, this is all of the stuff, and this is kind of a new thing that we can do at Trade Ideas that we were never able to do before, where I have access to so much data that I can play with. And again, anyone who knows me knows that I'm a massive data nerd. But yeah, just from that little, I made a big, I wrote tight pinch and I put some exclamation marks next to it. So yeah, as this thing evolves, not only everything you get today, but everything you'll get going forward from Brian. So yeah, look forward to the tight pinch one. And again, I will just have a scan and it will just tell you the distance between the upper anchored VWAP and the lower anchored VWAP in a percentage, and you can just rank them. So if you just want only look at the tightest ones, you can do that. So I just thought that was
That's
really
cool.
cool. And again,
Yeah,
just
I like that.
came.
Here's the thing too. If you're just familiar with traditional technical analysis, it's really a lot similar to a symmetrical triangle or an ascending triangle, in that you're seeing the range compress. But here we're measuring it not just on highs and lows that define that pattern, but instead by supply and demand. That then you start to really see the inner workings of how different participants, structure their trades and position themselves to make more money and manage risk, most important.
Excellent. We'll do one more question just because I found it kind of interesting. Brian, is there any case scenario where you would buy under the AVWAP to go long?
No.
Okay, that's kind of what I thought. Read the book. There's the book. Okay, for those that joined late, we do have a link in the chat to sign up for the add-on. You're going to need a Trade Ideas basic subscription to use this add-on. We're anticipating a lot of interest on this, so you know, info@trade-ideas.com if you have any questions. What I want to do right now is pivot to what we promised to, which was the free book giveaway that Brian will send out, and we're going to do it in the form of trivia questions. So get on the questions panel and get ready to type the answer. The answer is, and it's in Brian's first book, when you look at a 5-day moving average on a 15-minute chart, what is the period that you input? Who knows the answer? And who got it? No, you don't count.
Yeah, the first one was an
doesn't
employee.
count.
Get out of here.
It looks like Russell Harris. And about 20 of you got it right as well. Russell just happened to be the quickest and maybe had the less bandwidth to hear my voice. But very good, you guys. You guys are on it. Anything else you guys want to add that I forgot before we sign out and bring in Scott to talk about the details of how you can sign up for this add-on?
I will say I've been looking at the questions, and there's a lot of great questions. And there's a reason that this book is 200 pages and has 145 color cop charts in it. This would be a full day seminar to answer those questions and give you a good answer. I can give you a basic, no, I don't use standard deviations. I don't find them useful to me personally, but I've written about that in the book. What periods to use, all that is in there. Truly, it took me over 4 years to write this thing. I wasn't writing every day, but from concept to getting it out, it was very thoroughly researched. I'm super proud of it, and I pretty much can guarantee if you give it an honest chance, you'll find that the Anchored VWAP will help you become a better, more objective trader. And whether you do it yourself altogether 100%, you look at Alpha Trends as a subscriber and have the ideas spoon-fed to you, or you take advantage of this amazing technology. There's all kinds of ways to implement it. And I'm always very careful to point out that do what works for you. Does it make sense? It's supply and demand. It should make sense. Maybe you've been taught wrong, but hopefully the book will help straighten you out. But if MACD works for you, stick with MACD. But take a look at this and try to add it to what you do, because I promise you it will make you a better, at least analyst. Being a trader, that's a different story. That's a completely different skill set, but hopefully there's tips in there that will help you with that as well.
Yeah, great stuff. Thanks everybody for your participation. Somebody asked if there's a digital version. Yes, Matt, there's a digital version on Google. Correct, Brian? You can buy your copy on Google.
It's on Google, it's on Apple, and it's on Barnes & Noble.
Great. All right. What a great presentation, great audience participation. Will it work on FX? I saw that asked a couple times, Brian.
It's supply and demand. I don't trade Forex. I did years ago before I was really into the Anchored VWAP. I don't see why it wouldn't, but I can't tell you I have personal experience using it. But again, it's all supply and demand. So if you can get price, volume, and time, it should be able to work and give you the same insight into markets, regardless of what they are.
And if you're measuring the greed and fear, if you're measuring the greed and fear of the people out there, it probably will work. Yes.
Yeah, and I'll share a chart with you on Twitter, Brian, that you can tweet out. So that proves kind of absolutely.
Okay, cool.
I'll mark one up and I'll fire it over to you. Muted
Lost
again.
your audio, Steve.
Thank you. Great success, great turnout. Thank you, everybody, for showing up. I'm going to let Scott come in. We've got a slide up here just to kind of remind people what the next steps are. We've created some videos as well. It's just simply a second subscription add-on. You have to have the basic standard subscription to Trade Ideas. And boy, we hope you like it because we sure are excited about it. Scott, you want to walk us out?
Just go ahead. If you want to add this to your Trade Ideas subscription, just head over to trade-ideas.com/features/AVWAP. You do have to have an active Trade Ideas subscription, either standard or premium. You got to get the new beta. We have a new beta available at tradeideas.com/beta. It's version 5.6.46. And remember, it's an additional $49 a month for the Alpha Trends add-on. But the first month is discounted 20% if you check out with the code Alpha Trends. And that code will also work if you're starting a new subscription, either standard or premium. Take 20% off that as well. If you have any questions, please email support@TradeIdeas or info@TradeIdeas. They both go to our support team. And you can find the video replay of this on our YouTube channel. It's youtube.com/TradeIdeas. It'll be up there tonight. And tomorrow you'll get an email reminder from GoToWebinar with a link to the playlist where you can find it and a link to where you can buy Brian's book. So thank you so much, Brian. Thank you, Michael. Thank you, Steve. Thanks everyone for attending.
Thanks everybody. Yeah.
All right. Good job. Thanks everybody. See you on the replay.
Okay. Bye.
Thank you.
Bye.